Thank you for taking advantage of this opportunity to watch the AfroEconomics quarterly update. This is that time, the quarter, the Q3 as it's called, the third quarter ended. Yes, it did. It ended at the end of September. Can you believe that? For 2018, we only have one quarter left. Yes, we do. So what we're going to do is just go over some of the highlights, and there's some politics involved in it, but we can see how business can actually benefit from politics. Yes, indeed. So I'm going to share my notes with you. The third quarter AfroEconomics update. What happened this quarter? I want to kick off with some real Afroeconomics. Nike's controversial Colin Kaepernick's advertising wasn't just about politics. It was part of the company's growth strategy. Indeed. Yes, it was, because the company actually saw online sales go up over 30%. Think about that. And the stock dropped only 3% in response, and before the end of September, it reached new record highs. So seriously, y'all, we need to look at how smart that company was. In doing that, it really just brought new attention to Nike, and they were able to take full advantage of that and getting the sales and getting their stock price up. And how about that? I'm going to also see if I can share with you. I'm going to show you that. I thought that was interesting. And get to the back. No, I want to show you something else. I don't know if you could see that, but I want to show you, and I could just pull it up. Let's look at it. And their stock price, and I wanted to show you it historically. The NKE is a stock symbol. So if I pull that up for you, then I share that with you. Let me see if I can do this share. I think you could see it. I hope you could see it. Somebody tell me that you can see what I'm looking at. So that you'll see that it closed as of October 8th at $80.12. But when I click the 5-year, and then let me see. When I click the 5-year, then I actually look. Look, I asked you to chat and let me know if you could see it. And then I pulled out, and then I can't see you. So let's see. So at the 5-year, on the 5-year chart, you'll see that let me see, I'm gonna go move over just a little bit when I move my little pointer, and it'll show the 5-year chart right around in there. Let's look at the maximum chart. You'll see right there, September 28th at 84. Over $84 is the $84.72, September 28th. So indeed, even though it dipped right after the campaign came out, that it didn't seem to even slow them down. Now, I have had people call me about that participating. Oh, you can see it. Good. The people call me about the Nike stock, and right after it, especially right after that move. And then I explained to them, because most people through work or through Valron says they can't hear. Oh, Valron, turn your volume up. How are you all doing? That's a merger. That is a Mr. and Mrs. And they put their names together, and I love it. So definitely everything is cool over here. Everybody can hear and see. So you're gonna hear it in a minute. Probably the volume is just turned down from y'all partying over the weekend, right? But so I want to point out that even though it may seem that over the short term that some things turned south for the stock, that over the long term is what we're focusing on. and that the stock price has moved higher. They're making more money. They should be releasing earnings. And it looks like their earnings are going to be up over like $500 million, talking about 7% growth for the year, from year to year. So we'll see how those come out. But indeed, that when I received the calls, I went into discussion about their specific portfolio, because sometimes you'll have your portfolio and you don't really know what's in it. Well, when you're participating in, say, for example, the S&P 500, which is included in a lot of my AfroEconomics investment portfolios, and Nike is a component of the S&P 500. So be, conscious of, if you have that, if you have the S&P, if you don't have it, what does it look like? It can go under different names. You can have ETFs that model the S&P 500, but we need to be aware of that. And I can kind of, let me show you this, because I pulled that up. That's the stock one, but I did also, I pulled up like this thing. It's behind. That's what I'm looking up. But I just actually looked up like what is in the S&P 500. I hope you can see this. And then it just breaks down like that's 500 stocks. So in many cases, people are going out of their way to buy, to avoid stocks. But if you don't feel comfortable with stocks, looking at indexes and looking at ETFs and that model the S&P 500 could be a good beginning. And I have to continue to share information with you about what is actually in it. So you're just going down and you're going down the 500, look at that key, all of these. So then you see, I'm almost to the end. And then there's NKE, Nike. It's called a consumer discretionary apparel, accessory, luxury good based out of Oregon. So definitely those make sure that before you start thinking about, I need to buy this outside of what I have, or let's get a good understanding. That's the first thing that I do with my members, is just get a good understanding of what you're currently doing. So that's very important for you to do. And then thank you. I see new people coming in. So then let's continue to go through. So we talked about that, the Nike movement, a major Afroeconomics news for this quarter. So the third quarter of 2018 is going to be remembered as a great quarter for stocks. The Dow Industrials, the NASDAQ, and the S&P 500 all rose more than 7% over these 3 months, as bullish investors maintain their confidence and they continue to move the stock market forward. Consistently strong economic indicators and impressive corporate profits help motivate this rally over the summer. Usually over the summer, you'll see a slowdown, but we didn't see that this year. The trade war in China that began in the second quarter intensified in this third quarter, even with both nations attempting to resume the negotiations in July. China and the U.S. each imposed import taxes on $34 billion worth of each other's products. In August, they saw both parties expand the tariffs to cover $50 billion in goods. In August, it went up to $50 billion. And in September, the U.S. placed a 10% tariff on $200 billion worth of China imports, slated to raise it to 25% in 2019. And China retaliated with us with further tariffs on its end, assessing levies on 60 billion more of American-made products that are going into China. So, and I wanted to just kind of give the Investopedia the definition of a trade war. So we include that in our Afroeconomics look at that. And then it says a trade war is a side effect of protectionism that occurs when one country raises tariffs on another country's imports in retaliation for, say, China raising tariffs on the US imports. So a tariff is a tax that's imposed on imported goods and services. So trade wars can commence if one country perceives another country's trading practice to be unfair, which, that the Trump administration is saying that they're benefiting, that we're not charging them enough for bringing things into the US. Or when domestic trade unions pressure politicians to make imported goods less attractive to consumers. So if you have businesses that are pushing the politicians saying that everybody's buying these imported cars, why don't we make it more expensive for them to buy an import? Or American companies are going overseas to get their cars made. And then why don't we, do things to make it less attractive for them to go over there and get the cars made so that they can invest again in manufacturing over here? Any questions from you all, please? Please make sure that you call me at the 1-833-ASK-AFRO, okay? So that before I leave, because I'm not going to be with you too long. I'm working. I'm working. I'm glad you all have the day off, though. Indeed. So another look at the third quarter, of course. The Federal Reserve officials decided on another quarter-point interest rate hike. The September 26th decision took the federal funds rate to a target range of 2 to 2.25%. The latest Federal Open Market Committee statement removed the word accommodative, symbolically shutting the door on the easy money era, meaning it's not going to be as easy to get money and for banks to get money from the government so that they can more easily lend money out. So I use that as time for us to avoid debt. As always, the key word for AfroEconomics, don't borrow, avoid unnecessary things. Do you have any adjustable interest rate loans? It's time to look at those. Talk to me about it during our quarterly meeting. Do you have lines of credit or adjustable interest rates on your debt? Especially, you see this a lot in business loans. You'll see this where they'll have every 90 days your interest rates can go higher. You want to try to protect your business. I've seen a lot of businesses go through extreme duress and even have to close down because of these interest rate adjustments, not to mention people that are in a loan that can step up in interest rates, or and always be conscious of balloon loans that you're going to, because you know that if your balloon is coming to the end and you're going to try to refinance, your payments are going to go higher, and it might make the asset that you have the loan on unaffordable for you. So let's be aware that we are indeed in an increasing interest rate environment. The Nikkei 225 was the one major foreign index that performed as well as the American counterparts during this third quarter. The Nikkei rose 8.14. The Nikkei 225 is commonly called the Nikkei index. The Nikkei stock average is a stock market index for Tokyo Stock Exchange. How about commodities? We don't really think about those that much since the Eddie Murphy movie, but we should wonder, why did the prices of things go up, right? So the ones that went down, where platinum had, there was a long list of losers for the third quarter. Platinum was down 4%, soybeans were down, gold was down, copper was down, cotton was down, sugar was down, coffee was down, the cocoa. Lumber was the worst performer during the 3 months ending in September, dropping 31%. Gold was down, silver was down, and I think I mentioned that, yes. And then palladium and oats finished the first and second in commodity performance. They were first, palladium was first, oats were second in performance and growth in prices in the commodity arena. I don't trade commodities, but it does impact the price that we pay for things, So, of course, crude was up, the natural gas was up, the US dollar index was up slightly. And interesting enough, just a little tidbit, that palladium is used mostly in manufacturing of parts of cars. Interesting enough, right? So then I think it's like the catalytic converter, because I was curious about that. Yeah, I looked it up, but palladium, catalytic converters. Must be making a lot of them, right? So the existing home sales for the third quarter make up the vast majority of residential real estate transactions. And according to the National Association of Realtors, existing home sale transactions were declined in July and were flat in August. And I guess we'll get the September numbers later. Then also the Census Bureau did find that the pace of new home sales did improve in August. New homes, 3.5% improved in August after a 1.6% decline in July. So that's good to know. Now, interest rates in June, the 30-year at 4.5. In September, that 30-year was at 4.72. The average interest rate on a 15-year, 4.0, and a 5-to-1 adjustable rate mortgage, 3.87, and the 15-year was at 14.1, and the ARM was at 3.97 at the end of September. So, thinking about, I have a tip that I have in there. I'm going to email this to everyone that registered my notes, and that for single parents, I don't know if you've ever checked out, I have the babymamamoney.com. Single parents, consider buying permanent life insurance. This will ease the strain on your household because of the loss of your income. You are the main, and I don't know if you've listened to my podcast on single parenting, as the main and only income earner for the household, your death would cause challenges for those who depend on you. The amount of life insurance coverage provided by employers is typically not enough to cover all of the needs that are for your income to be replaced. And then it also, a permanent policy does have the extra saving component, so it does allow you to save and build an estate. But most importantly, I want you to consider term insurance if your budget does not allow you to get the insurance that is needed for to protect your household completely. And too often, and this is single parents and not single parents, we tend to just purchase the life insurance, and we don't realize that you are choosing it based on how much money you have, instead of making sure you completely look through options to make sure that you have the proper coverage. So I'm saying that if the agent sells you $300,000, but you really need $500,000, or you really need $1 million, then you really need to focus on, how do I get that $500,000, or how do I get that $1 million of coverage? And if that means you have to get term, you have to get term, or at least consider it and get a better understanding of that. So call me, and I'll have that in the 1-844-JB-Bryan. Just call me or email me. Take advantage of that during your quarterly meeting if you're a member. But let's make sure that we talk about getting proper protection. And then let's look at just overall performance coming up year to date. And the Dow Jones led the Q3 rather than the NASDAQ. The small cap Russell 2000 advanced. Let's look at how they are. The Dow ended the quarter at 26,458. The S&P 500 was at 29, and the NASDAQ was over 8,000. So the NASDAQ did in this past quarter went over 7,000 and over 8,000. That's the first time it had ever crossed 1,000 points since in two 1,000 point thresholds in the same quarter since 1999. So just a quick look at the Dow Jones Industrial Average year to date is up 7%. The NASDAQ is up 16%, and the S&P 500 is up almost 9 at year to date at 8.99. The 10-year average on the Dow is over 15%. 10-year average on the NASDAQ over 30, and the S&P 10-year average over 16. So let's be aware that if you don't know your risk tolerance level, if you don't understand what you're investing in, if you don't understand most of the things that I said during this discussion, let's make a point to meet and talk about it, get a better understanding. And that's why I want to do these AfroEconomic updates more often live and not just in written form, so that I can give you the opportunity. You said, speaking of commodity, we have a question. You should have called that in, Dr. Williams. Speaking of commodities, would you highlight the reasons why someone would invest in commodities or commodity options? I probably cannot do that because I don't trade commodities. And so there's probably somewhere in the world someone listening to this and they want to make sure that I answer that no. But I do feel that we need to have an understanding of commodities and understand the risk involved in all of these investments and talk with your financial advisor about it. And then also find out, if commodities are within your risk tolerance. I haven't met a person yet whose risk tolerance really can handle the commodities trading. But there are now like some ETFs that we can look into, exchange traded funds that give you commodity exposure so that you could easily have a percentage or small percentage of your stock portfolio that is giving you some commodities exposure. I like for us to just have an understanding of the price movements in these products so that you can understand how they impact you as a consumer and as a spender. But definitely there's some ways that we can get that exposure without being on the commodities exchange and having to go through all of the requirements that it will require for you in sometimes some restrictions of being able to trade the commodities. But we could do that, backdoor it through using some ETFs with commodity exposure. Thank you, Dr. Williams. But definitely know that that we're going to continue to talk about this, and I'm glad I brought it up because the only question that I got was about something I usually don't even talk about at all. So I'm glad that I talked about the movement in gold and silver and palladium and those things, so that you know that those are commodities and they are real. It is an exchange. We do have a complete commodities exchange separate from our stock exchanges as well. So let's look at that. If that is an interest to you, let's make sure that we offline continue our discussion on that so we can expand your information on that. Thank you. Thank you, everyone. Please share this with any of your friends that want to have a summarized look at last quarter. Don't forget, we have our Wednesday night coming up. And if you would like, if you are not on the registration, make sure you email me, jb@afroeconomics.com, and I will get you the notes from today's discussion that has all of the small print on where those numbers come from. I have to give credit to the WSJ.com, the WallStreetJournal.com, on those specific numbers as well. Thank you. You all have a wonderful day. And thank you for participating. Thank you for taking the time out. Don't hesitate to call or email or subscribe. To those of you on email, on YouTube, please subscribe, share, comment, please. Love your comments. Take care.